Welcome to our weekly XAU USD analysis from FX Tech. This report covers the trading week from December 1st to December 5th, 2025. After a historic run, gold has entered a consolidation phase. We'll break down the key price action, the driving forces, and the critical technical levels you need to be watching. Stay tuned as we explore whether this is a pause before the next leg higher or the start of a deeper correction. Let's get into the analysis. This week, gold took a breather. After opening near $4,249, the price saw a tug-of-war between buyers and sellers, ultimately closing at $4,198 for a minor weekly loss of about 0.65%. While the price did hit a high of $4,259, the inability to hold those gains indicates that profit-taking is a significant factor. This consolidation is a natural market response after such a strong rally, and it sets the stage for the next directional move. Three main forces are currently shaping gold's trajectory. First, the market is betting heavily on a Federal Reserve rate cut, which is fundamentally bullish for gold. Second, the persistent weakness in the US dollar is providing a strong tailwind, making gold cheaper for international buyers. Finally, ongoing geopolitical uncertainty and stagflation fears are bolstering gold's status as a safe haven asset, creating a solid floor under the price. These competing dynamics are creating the current market balance. Understanding the technical landscape is crucial right now. On the upside, immediate resistance is at the 4,250 weekly high. A decisive break above this level could see a push towards the major resistance zone at 4,330. To the downside, the psychological $4,200 level is the first line of defense. Below that, we have stronger support at $4,150 and, most critically, at $4,100. This $4,100 level is the key to maintaining the bullish structure. A fascinating technical pattern has emerged, a bull pennant. This is the third such pattern we've seen since the rally began in early 2024. A bull pennant is a classic continuation pattern, suggesting that the market is simply pausing before resuming its upward trend. A breakout above the pennant's upper trend line would be a strong confirmation for the bulls, signaling that the next leg of the rally is underway. It's a key formation to watch in the coming days. In the short term, the market is trading within a well-defined range between the weekly low of $4,192 and the high of $4,259. The pivot point for this range is right around $4,225. If the price can stay above this pivot, the bulls have the advantage, and a retest of the highs is likely. However, if the price falls below $4,225, the bears may take control and push the price back down towards the bottom of the range at $4,192. Looking at the bigger picture, the midterm outlook is defined by a wider range. The ultimate upside target remains the $4,330 resistance. However, the most critical level to watch is the $4,100 support. As long as gold remains above this pivot, the long-term bullish trend is intact. A break below this level, however, could signal a deeper correction, with potential downside targets near the $3,950 area. How the price interacts with $4,100 will be key. The current consolidation could end abruptly with several key economic events on the horizon. The most important is the core PCE inflation data, the Fed's preferred measure of inflation. This will heavily influence their upcoming rate decision. Of course, the FOMC meeting itself will be the main event, providing crucial forward guidance. Also, keep an eye on the latest jobs data and ISM PMI figures, as they will paint a clearer picture of the U.S. economy's health. While the overall sentiment remains bullish, a healthy dose of caution is warranted. The primary risk is further profit-taking after the market's incredible run. Technical indicators are also showing overbought conditions, suggesting a cool-off period may be necessary. The biggest risk, however, would be a hawkish surprise from the Federal Reserve. Any indication that they are not as dovish as the market expects could trigger a sharp and sudden sell-off in gold. In conclusion, gold is in a healthy consolidation phase. The fundamental drivers for a higher price, a likely Fed pivot, and a weaker dollar remain strong. The key level to watch is the $4,100 support. As long as we stay above it, the bullish outlook is secure. While we can expect some choppiness ahead of key data releases, the path of least resistance appears to be upward. Our outlook is for an eventual retest of the $4,330 resistance zone. Thanks for watching.